In this video, I'm going to show you how to review a full day of price action. I'm a beginner trader, but in the last 12 months, I've been working with a mentor, and in the last 3 months of trading, I've been able to take over $25,000 in payouts from TopStep. A huge part of my progress has been the review process that my mentor drilled into me. Marking up key levels, finding the best trades, spotting any traps, and building the plan for the next session. And the mindset shift that most people miss is that as a beginner trader especially, your P&L should not be your number one priority. That might sound counterintuitive as a trader, but especially when you're first starting out, your focus should be on a concept called learning P&L. What did you learn today and how did you progress as a trader? If you build a daily routine where you journal all your own trades and review the entire day's price action, you stack reps fast, and that's how you actually improve. So coming into every day, we want to be doing a pre-market analysis. And I've already got some key levels drawn here, as you can see. But to show you how I do this, I'm just going to zoom out onto the daily and the hourly chart. Now, these two bars hadn't formed yet coming into the day, but as you can see here, we've got a massive run up, a huge bull candle with follow through, and then the next candle is a massive outside bar that is also closing as a trading range candle. Now, this could not be a more obvious trading range to draw, and so we draw this trading range on. From here, the next key levels, or at least the basic ones that I like to mark, is if you go to the previous day, you want to mark the lows, which I've marked here with this line. You want to mark the highs for the Asia session, and this line for the overnight highs. You then want to look for any sort of trends or other key levels. For me, what I was seeing is these lows were connecting along here. Every time price tries to break below the level, it comes back inside. Below, back inside. That channel, if you copy the line across the top, it also holds the highs. Every time it comes out, it comes back in, comes back out, comes back in. Now, if we come down to the 5 and 15 and actually start to look at Friday's price action, this is the start of the day. You've got your prior low of day drawn on down here. You've got your high of day here, you've got your overnight highs, and you can see here where the bull channel is coming. So now you've got your key levels drawn on. As you're going through the day, I said this in the last video, you'll see it in my mentor Hamish's videos as well. You want to be drawing on the opening range. So the first 3 bars create for us an opening range. So this is the pre-market, and then the next candle, the 11 o'clock bar, wicks strongly outside the range and closes all the way back down to the lows. It even was able to get price below the range, and while it wasn't able to close, it did close as a strong bear bar. This sets up potentially the first trade of the day for me. So you get a very strong outside bar, you've got a test outside the high of the opening range, and now closing all the way at the lows. You're below the EMAs, and on the higher time frame, if we go back to it, we are in the middle of this very strong bear channel. This is a tight bear channel, and so to have this outside bar on the 5 minute continue that channel is a good indication that we could be going lower. If you were to take that, putting your stop at the high of the outside bar, entering at the lows, you're looking at an extension down to here, 53,840. If you extend the opening range as your measured move, you've also got 53,855. So now you've got your prior low of day at 800, and you've got your measured move of the outside bar down to 840. Now this area down here, if you are getting short, is definitely where you want to look to cover, or at least look for where the bulls are supporting price at this level, and if they do, you definitely want to be covering. So that's your first chance to enter on the short. You then get a follow through bar with a large wick on the bottom, and as you can see here, this was the bull channel that we had drawn on. So a wick outside the bull channel and coming back inside is showing that there is a bit of support along this edge. The follow-up bar here creates what is called a H1. So price gets above the previous candle, creating a H1, but we can't even close back inside this opening range. We are also below the EMAs, and this in itself is another good area to short. So you can either short below the outside bar, or if you want to wait to see if there's follow through, which there is, then you can get short on a bad looking bull bar, which this one definitely is. So if you were to short that bar there, keeping your stop at the high of the outside bar, you've got a 1R down to your prior low of day. That in itself is a very high probability trade. The follow-up candle is an inside bear bar, and then we get another overlapping bar before a very strong outside bear bar. This bar wicks exactly to the current low of day at this point and closes again inside the bull channel. So at this point there is clearly bear momentum. If I go back to the 1 hour and daily chart, as I've shown already, we're still aligning with that momentum. But there is also clearly either bulls buying here, or at least at minimum bears covering and taking some profit at these sort of key areas. When you are looking at these key levels, it doesn't need to be exactly on a particular line. You're more just sort of looking in a rough general area like that. What I was looking at this point in time was potentially a double bottom with price having 2 attempts outside of the bull channel, and stupidly during my day I rushed and entered somewhere in here and then had to sit through more pullback. At this point in time you get a 1 push down, 2 push down, and then a 3rd attempt down. This, while it is an ugly wedge, is still a wedge. 1, 2, 3 pushes down. So above this bull bar, it is not a high probability entry. However, if you did make the mistake of entering on that bar, what you should be able to see is that strong bull bar, no follow through, strong bull bar, no follow through, and that gives you a chance to exit somewhere up here, or at worst case, what you get here is a double top with a lower high and a strong bear bar. What that sets up is a terrific chance to get short below that bear bar. You can keep your stop above that high. You've got a 1R just to there, and you can hold to try to cover at the low of day at least for nearly a 2R. From here, you get a very strong bear bar. This can often signal exhaustion, and when you get no follow through, a wick below a key level and then a close back inside the key level, it is a very strong signal that that was potentially just exhaustion, and it gives the bulls a chance for their first high probability entry of the day, which is on a better looking wedge bottom. It's also after you've had 2 attempts, 2 attempts to go through the key level, a close back inside, and the other thing that you've got in your favor is if you buy the close of that candle, it is very little risk. You're only risking 55 points. You get a 2R just to here, you get a 3R to the edge of the opening range, and you get 4R, 5, you get like a 7R return to the high of day. So very good entry for the bulls there. If you did take that entry, what you then need to see as a bull is bull bar, no follow through, bull bar, no follow through, bull bar, no follow through. You get overlapping bars, trading range candles all through here. There is no momentum for the bulls. Our indicator makes it easy. If you're a bull, you need to be looking for the bar to get colored like this. If you're a bear, you're looking for the bar to get colored like this, and that signals momentum. There is no momentum anywhere within here. And so, like I said, if you did take that entry and you're up 1, 2, even 3R all the way up here, and you've got no follow through candles, you've got to make the decision. Are you holding for the long-term bias that you've got, or are you just going to cover into some of these areas? In here, this is a very tight range, overlapping candles. You could look at it as another double top at this level, a bad close for the bulls, and potentially try to get short through here. But it's also during the lunchtime period. It's very low volume trading, and in my opinion, there's not really any great trades in there. It does set up, though, the next best trade of the day. You get a very big wick on the bottom of a strong bull candle, and it came all the way to the prior low of day, which was our key level. So we've had 2 pushes down, and now we get a 3rd attempt that can't even get below it and closes strongly as a bull candle. This is a serious sign of strength for the bulls and a great spot to go long. You then get the first sign of momentum for the bulls all day. At this point, you've had strong candle, and follow through. Because we've got momentum, you can now put on your retracement tool. The target would be all the way up here at 54,120, and the 50% pullback is somewhere in here. You get push down, so a 2-legged pullback, which is what you expect, and a bull bar closing on its high. The bears can't even get it to a 50% pullback. You're now above the EMAs for a fair bit of time. You've had plenty of chances for the bears to get below these key levels, and they can't do it. And the other thing is we're back inside this bull channel that we've had drawn on since the start of the day. If you risk the low of day, you get a 1R to here, you get a 2R back to the highs. If you were already in this trade because of this entry here, you could just be using that as a spot to add to your position. So that's another great chance to buy. From here, what you then get is clearly price is now above these EMAs. You get a push below, but a weak follow through candle. It creates a double bottom with a very strong bull bar. I did not take this trade. I didn't even really see it or pay attention to it when it was happening. But one of the traders in our community did a very good job of taking this entry, and even better yet, he took an amazing exit. So I'm not sure exactly where he risked, but let's give him the benefit of the doubt and say he only risked the candle. It's a 40-point risk, just that candle alone. You get a 1, 2, 3, 4R, and you're not even at the highs of the range. A 5R if you covered up here. He did a great job of, I believe, covering on this close here, and it is a great spot to cover because what I failed to mention earlier was the 50% retracement of this bear leg, which is at 54,130. So literally right in this area. At that point, you get a 1, 2, 3. This is a wedge top right here. It's a wedge top at a key level, which is the current high of day and the current high closes. So if you are a bull and you're still in your positions like I was, you should be covering in this area. We're getting quite late in the day. You get a nice bear follow through off the highs. And so if you're looking for anything, you should probably be looking for shorts. But yeah, I don't really see any sort of high probability setups for me in here. So there you have it, guys. That's the best trades from Friday, showing you how I marked out the key levels, the best entries, traps that you can also avoid. If you're looking for more of this type of stuff, my mentor Hamish is posting a series breaking down how to learn price action trading. We also have a Discord server where Hamish breaks down all of the price action on the Nikkei every single day. If you're interested, please head to the description down below. I'll leave a link down there. You can also jump in there and ask any questions you've got. It doesn't have to be on the Nikkei specifically. If it's about trading in general, whether it be a particular instrument you're trying to trade, a trade that you've taken, or psychology, whatever it might be, jump in there and ask away. You don't need to do it alone. So yeah, I look forward to seeing you guys in there and in the next video.